Hey guys, this is Steven, and today I'm going to be showing you guys how to day trade the 1 minute time frame. And today I'm going to be showing you on SPY, but every morning around 8 a.m. I pull up the charts and I'm charting the current trend on about 3 to 4 tickers, and I pay attention for the reversal during pre-market or right around open. And today we're going to go over the price action from July 3rd on SPY. We had an early closure at 12 Central, so I went ahead and marked that out just so we have a reminder there. And so let's get started. All right, so I'm not paying attention to any of the news. What I'm doing is just going ahead and marking out what price action shows us, and we're just showing that it's in a downtrend currently. We're gonna wait for price to break this level before we start entering calls. All right, so it broke here during pre-market, and so we'd be looking to enter calls right at open with the stop loss. Well, actually, the uptrend line has already formed. So we'd be entering calls with the stop loss below this green line. So as long if we don't get a candle close below the green line, then we're going to stay in the calls. That's going to be the only signal to exit these calls. Okay, we're going 3x. Still good. Still in the calls. Okay, we got a bounce here, and then we got the candle close here. Okay, so the entry on these calls was 622.45, and the exit was 625.31. Okay, so we got a candle close below the green line, and there's no fair value gap at the line for this to bounce from. So the safest way to trade this is to always exit, just from my back testing. Okay, so from this point, we're going to be looking for puts if you weren't in these calls, right? So we're actually going to start, because prices continue to move higher, we're going to adjust our uptrend line to continue with the movement. So when price breaks this green line, that's when we're going to be entering our puts. Okay, so we got a break there. So this is where, on this candle here, this is where you would enter puts with a stop loss above this green line until the downtrend line forms. But we get the downtrend line formed here. Okay, so as long as price stays below this red line, we're going to stay in puts. The entry was 625.68. Okay, see here we're getting candle wicks but no close, and then we get a bounce from here. So if you were scalping this, I always tell people who scalp to always sell or trim at first resistance. So if you know that there's a fair value gap here, you should expect a reaction. So you can always trim or sell your whole position if you're scalping here. But here we get a bounce, and then we get a close above the downtrend. So our entry was 625.68 on the puts, and the exit was 625.39. Okay, if you're playing strictly the trendline strategy. So if you weren't in these puts at this point, you would have entered calls here at 625.38. But this calls here would be risky because you do not have an uptrend line formed yet. This is, one straight move up. So your stop loss would be this red line until the uptrend line forms. But you see this is sloping down, so it's really risky. We're gonna go ahead and move this over here. Okay, so we broke this bearish fair value gap, so we can probably expect this to be support. But say you entered calls here. What did I say? It was 625.38. Okay, and then so we get this uptrend line formed. Okay, so as long as price stays above this green line, we're going to stay in the calls. The entries was 625.38. Okay, and that was pretty quick. So our stop here. Oh, we did get a bounce here. So this is a fair value gap right at the line. We get a bounce here and then close. So an invalidation of this fair value gap, so 625.87 would stop us out of the trade actually. So let's see what happens. Okay, so yeah, that would have been stopped out. So 625.38, and let's back up a little bit. Sorry guys. That would have been 625.87. So you would have still profited something there. Okay, so from here you would have been looking for if you weren't in these calls, you'd be looking to enter puts there, and we draw the downtrend line here. So pretty much you're just trading back and forth. If you're not in calls, then you wait for the puts. If you're not in puts, you wait for the calls. Hope I said that right. It's getting late over here and I'm tired, but okay, let's keep going. So here, if you weren't in the calls, you're going to be entering puts here at, let's just call it 626, and you're going to stay in these puts as long as price stays below this downtrend. Okay, so here, because this is a candle wick right here, this would have not stopped us out, but we do need to adjust the line, because you see what happens now. These candle wicks do not stop us out, but if we had kept it the way it was, these candle bodies would have definitely stopped you out. Okay, so you got to always be adjusting your lines, and the lines are basically just stop losses. That's all they are. They're guardrails for you to see price move and have some semblance of, you know, the way that they're moving. Okay, so we come here, we get candle wicks, drops down, and let's see, we got about an hour and 40 minutes left of market. Okay, I'm actually not going to adjust this any higher, because any higher, our stop loss is going to be flat. Okay, so let's keep that there. Okay, so as long as price stays below this line, then we're going to stay in the trade. And we should be expecting rejections here, and we get stopped out here. Okay, so that was definitely a stop out. Okay, 626 down to 625.92. So you probably would have lost a little bit just due to theta decay, but SPY did not move a lot. And so you could have sold anywhere between here. A lot of you guys probably would have sold down here, trimmed here at least. Okay, so if you weren't in these puts the entire time, then this is where you would look to enter calls. And we've got about 15 minutes left, so these are definitely lottos. Okay, so we're going to keep our stop loss tight on this one. Okay, so as long as price stays below this green line, then we're going to stay on our calls. Okay, and we pretty much got stopped out very quickly. Let's see, so that was about 625.91 to 626.01. So I think you would have made a little bit of money there. But pretty much that's it. What I typically find is that you're going to catch your biggest trend in the morning, and it's going to be the reversal of whatever trend was playing out in pre-market. So this would have been probably the only trade you needed that day, but let's say you missed it. There's always opportunities to catch reversals, and if you catch them at the right time with the right strikes, some of these moves are 50%. So good luck, guys, and if you have any questions, feel free to reach out to me, and I'll try to answer as quickly as I can. So thank you guys for support, and please like and subscribe. Bye.